That's what we are trying to do. We want to see how we can carry out analysis that would give us a profitable edge many of the time, all right? So let me share my screen. I'll quickly share this with us. Anytime I use the word strategy, or I say system, or edge, or I say the word edge, they are all the same thing. It does mean how we are going to approach the markets. They all mean the same thing. Now, a strategy, a system, or an edge is just the probability of something happening over another thing. That's just what it means. It means this is likely going to happen over another thing. And in trading, we have to be reactive and not predictive. All of our trades must be reactive. What it means that the reason why you're in that trade is because you are reacting to something that you have seen on the chart. So we are to be reactive and not predictive. So how do we do this in a very simple way? How do we do this in a very simple way? Now, there's something called market conditions or market structure. That's why I decided to make it a 3 days training. What do I mean by market condition or market structure? So anytime we open any chart, it will be operating under one out of these 3 different market scenarios. They are called market conditions or. So let me quickly share that with us very, very fast. And we'll go on. So, what are our market conditions? What are the market conditions that we have? So the 3 market conditions that we have, market conditions, is that it's either the market is in a reversal. Number 1 is called reversal. Number 2 is that if the market is in a trend. Then number 3 is if the market is in a range. Now, a range is also the same thing as a consolidating market. Consolidation. Any one out of these 3 is regarded as the market condition. Any one out of these 3 scenarios is regarded as the market condition. All right? So for today, we are going to focus on reversal. Today alone, we're going to focus on reversal for the next few minutes. And then we'll move on from there. Okay, so let's focus on market reversal. Right? So reversal is any area where price tends to change direction from. That is just what it means. So today we are only focused on reversal. Now, reversal can only happen in 2 places. Anytime reversal does not happen, continuation won't happen. So reversal can only happen in 2 places. That's the only thing reversal can do. And the 2 places where reversal can happen is anytime price is reversing either at support or at resistance. That's just basic knowledge. We already understand that. It's either price is reversing at support or price is reversing at resistance. These are the major places where price can reverse from, all right? Now, those of us who are using laptop, we already have a software that can help us do that. And then those of us who are using phone, we need to manually look out for this horizontal support and resistance. How to do that? The video of that will be posted later today on the group, all right? So any place we see price move to and change direction from there is regarded as a reversal area. Now, anytime any of us is trading or targeting a reversal, price must have gotten to a very high level or must have gotten to a very low level. And since the golden rule of trading is to sell high, and then buy low, that's essentially all that we're trying to do. It's also the same thing as selling at resistance and buying at support. That is what we are reacting to. What are now our signals to enter, buy or sell? As we have said it before, it is just two basic candles, that's all. So the one that has to do with the support, it's always a red candle that we get to a support first. So you see, I'm drawing a red candle like this, and then followed by a green candle. Those are the two basic candles that we need for support. These are the two basic candles that we need for support. For resistance, we need a green candle first, and then followed by a red candle. Now, it does not really matter the shape or the size of the green and the red, as long as they are not dojis. See it? As long as they are not dojis. So the first one I've drawn up now is our signal to sell high, which is also the same thing as selling at resistance. It's also the same thing as selling at resistance. See it? And then the one I've drawn below is that of the support. That of the support, which is also the same thing as buy low, and also the same thing as selling, buying at support. That's just the basic knowledge of trading reversal. What happens, or what are the other basic things we need to consider when we are trying to target reversal? Now, reversal happens to be one of the few trades that can allow us to risk less and position for more. So in essence, what I'm saying is that anytime you are targeting a reversal, always use a minimum of 1:2. That is it. It has to be a minimum of 1:2. A minimum of 1:2. So let's say you're selling at a point, and then just wherever your stop loss is, your TP has to be minimum times 2 of your stop loss. That is what I mean. So let me go on the chart now, and I'll do for both laptop and phone and see how we can further prove these things that we are sharing. All right. Okay, so I'm going to open my MT4. Let me start with the laptop first. MT4, and then I'll share. Okay. Are we together? Can we see my screen, please? Can we see my screen?
Yes.
All right. Thank you very much.
Yes, can see it.
So since we can see my screen, let's go on then. So now let me also add that regardless of the time frame that you are looking at, there's always support and resistance on any time frame that you're looking at. Let me repeat myself again. There's always support and resistance on any time frame that you're looking at, but the support and resistance of the higher time frame is more superior than that of the lower time frame. Please understand that support and resistance is visible on all time frames, but that of the higher time frame is more superior than that of the lower time frame. It does not mean that of the lower time frame does not work. It just means that it fails more of the time than that of the higher time frame. Now, price will get to the support and resistance of a lower time frame faster than it will get to the support and the resistance of a higher time frame. But that of the higher time frame works more of the time than that of the lower time frame. Now, any of these time frames you are using to look for the support or resistance, your risk to reward must be high. Your risk to reward must be high, all right?
Yes, sir.
Okay,
We
sorry
can't
about
hear
that.
you, so
Yes. Sorry about that. Clear to attend to something. Okay, so I was saying that support and resistance that they are stronger on the higher time frame that of the lower time frame. So it does not mean you cannot follow that of the lower time frame, just that it fails more of the time, and then that of the higher time frame works more of the time, but it takes time for price to get there. All right. So if I'm looking at my chart now, for those of us who are using the laptop, any place you can see untested or weak, it's because you're just starting, you might want to ignore those places, even though there are also potential places where price can change direction from. Now, we'll notice from any chart that the candle that we get to a support first, the candle that always gets to a support first is always a red candle. No matter the charts you are looking at, the candle that will get to support first is a red candle. And as I said, what is a support? An area where price has changed direction from before. So as we can see, price has changed direction from here. Let me try and highlight the places, shapes, angular. Yes, this is one. Then this is two. See? So if we look at the colors of candle that got there first, it's always a red candle. It's always a red candle that will get there first. Now, at what point do I know that it's time for me to enter a buy on any of this support? The most important thing in the support is the close of the green candle, which is the bullish candle. See, it's red candle that gets to the support first. It is when a red candle gets to that support and then a green candle closes above the support. That is the best time to enter buy on any support. So if I'm going to highlight those places where the green candle closed above the support, see, it is here. And then there is also another one here. See it? So anytime price gets to a support first, it will always be a red candle. And then it will take the close of a green candle above that support to enter a buy. It's as simple as that. It's as simple as that. Just understand that the close of a bullish candle above a support is a signal to buy on any of the support. Now, which of the support would you pay attention to? For those of us who are using laptops, we need to pay attention to this support. Anytime we see supports that are called proven, number one is proven, number two, verified, and then number three, turncoat. These are the three that we simply pay attention to. It's as simple as that. Now, if we flip it upside down, we get that of resistance. If we flip it upside down, we get out of resistance. And what are the signs for resistance? It's always a green candle that will get to a resistance first. Any resistance at all, it will always be a green candle that will get there first, right? So anytime we see price moving to a resistance, it will always take a green candle to get there first. And then when a green candle gets there first, it will now take the close of a bearish candle, which is a red candle. The red candle has to close below that resistance for price to go down, for us to envisage a sell. You see it when price hits this resistance, the close of the bearish candle, the red candle, is what would signify our sell. Remember, we have to be reactive and not predictive. So this thing has to happen first for us to then speculate that move. It's not in our place to, when price has not given us a signal to sell at resistance, we just sell at resistance. People do that and it works sometimes, but ideally, we are supposed to react to a signal before we pick a trade. And reacting to a signal at resistance is a green candle to get there first, and then followed by a red candle. So if I'm going to give us an example that is yet to happen, that we can add to our watch list so that we can begin to position for it when, if it happens, then begin to pick our trade, is the chart of Canadian dollar, Switzerland franc, CAD CHF. So if we go to the chart of CAD CHF right now, on the daily time frame, we're going to see that price is pushing up and is getting close to a proven resistance. You can see proven resistance. Why is it proven resistance? Price has changed direction from there multiple times before. See, that's the resistance. Now, like we said, it will take a green candle to get there first. Immediately price gets to this proven resistance, we then see a bearish candle, a red candle that will close below that resistance. In this area where I'm going to highlight, that signals are signal for sell. So anytime you are selling at resistance, it has to be a green candle first and then a red candle that will close below the resistance. It does not matter the size. It does not matter the size of the red candle as long as it closes below the resistance. That is the most important thing. Now, what will happen? Let's say we enter our buy and our sell in scenarios like this, and yet the trade fails. What do we do? If, for example, you buy at support, let's say this is support. If we buy at support here, and then price happens after you've seen your signal, which is a red candle first, followed by a green candle, we enter our buy, and then price breaks that support. If price breaks that support, we would need, and then we lose that trade. That buy trade is now a loss. It's not a problem. Losses are the business expenses of trading. It should not just be too much. That's just what it is. So losses are part of trading. It is normal. Losses are the business expenses of trading. Right? So anytime that happens, we buy at support and price hits our support. All we need to wait for is for price to return back there and then give us our signal to sell. So the signal to sell at resistance is also the signal to sell after its support is broken. Because once support is broken and retested, it then becomes a resistance. See, it's that simple as that. An example of that is what is happening right now on Euro New Zealand dollar. Let me please share that with us. So that's, we'll see, all right? So we can see from this chart here, the price, this place used to be a support before. This place used to be a support area before. And then price broke that support here. Price broke that support here. Now, number one, you would have entered the buy on this support here. Why? Because there's no even signal to buy there. The green candle did not close above that support. Immediately price broke that support, we can now see that price went down and then returned back to the broken support. Now, the signal to sell, which is green candle first, followed by red candle, and that broken support, that is our signal to sell. That's why you can see a sell trade here. See. So anytime price breaks support and we are on a buy, let's say we see our signal and then we buy and price still breaks the support, we should just wait for price to return back there and then to give us a signal to sell, and then we'll sell. It's also the same thing for resistance. Anytime price breaks resistance, and then, or let's say we see our signal to sell at resistance, and then we sold or sell, and then price breaks that resistance, the correction is just wait for our signal to buy. Our signal to buy would happen above that broken resistance, which is a red candle first, followed by a green candle. So that's how to always target reversal. That is the basic knowledge of trading reversal. There's really no new knowledge in trading reversal. Of course, it's always the ability to repeat what you have done, to be consistent with the system or the strategy that you are using. That is just what it is. You have to be consistent with it because you believe that in the long run, it's going to give you more profits than losses. So either it's working or not, you use the same system. In fact, you actually need to use the same strategy over a long period of time for you to say this thing is working or is not working. You don't take judgment based on one or two experiences. I hope we got that. Okay. So let me project my phone and then let me also share for those of us who are using the mobile phone. Let's do that quickly so that we'll then end this recorded class and then we'll take questions. So if you have questions, you can please note them down. I will give us enough time to ask our questions, right? So I want to share my phone so that we'll see how this thing works as well for phone. And like I said, those of us who have issues with marking support and resistance on phone, don't worry. A video on how to do that will be uploaded later today. Okay. All right. So if you're using phone, like I said, the first step to learning how to trade on phone is to first mark horizontal support and resistance. That's essentially what we are trying to do in trading. We are trying to buy low and sell high. That's all. So you might want to put your phone on auto rotation. For my phone, this is the signal. Once I put it on auto rotation, and then go to my MT4, then go to my MT4. So if I open any chart, let's say I'm opening NZD card, the first thing I need to do is to mark the horizontal support and resistance. That is assignment number 1 for phone. So I'll turn my phone to the side and then I'll look out for support and resistance area. So I can see a support below. Then I need to mark that, click on it, go to the object sign, horizontal line, and then my horizontal line is there. Details of this is in the other video, or sorry, the upcoming video. And then I also need to look out for resistance. Can I see resistance on this chart? Yes, I can see it. I'll first make sure I can see it first, and then go and pick another horizontal line and position for the resistance. On phone, you are not going to accurately pick all the supposed support and resistance, but make sure you work with the major ones. Pick the major ones and work with that. It's not a problem. Pick the major ones and work with that. Okay. So I can also see a resistance here. All right. So if we zoom in now to this chart, we would see that that place where we have found support is actually a red candle that got there first, now followed by a green candle. See it, red candle first, followed by a green candle. And then I can also see a turncoat support here. Here first panel. Once you understand turncoat support forms anytime resistance is broken, and then turncoat resistance forms anytime support is broken. See, so this place that is a turncoat support on the phone, my signal to buy is that price has to come back to that turncoat support with a red candle, and then I need to see a green candle, a bullish candle close above it. That is my signal to buy. Now, these lines that I've marked on this chart, I can use it to trade this chart for as long as possible. If I'm going to think of a sell in line with reversal, I need price to get to this resistance area where I have marked. Why? Because price has changed direction from there before. And then I'm going to see a green candle first, followed by a red candle that will close below that resistance. It's that simple. That is how I would always trade reversal. So I can go to another chart again. So let's say I go to the chart of AUD USD on the chart. Regardless of the time frame I'm looking at, there's always support and resistance on all time frames, all of them. Just that the higher time frame is more stronger than that of the lower time frame. All right. So I can see my support here. I first need to mark them out. If you haven't marked out your support and resistance, there is no way you can know ideally where reversal is likely going to happen, because reversal happens more of the time around those areas. That's why it's ideal that we mark them out first. And like I said on phone, you might not be able to mark out accurately all of them. Just mark out the major ones. Just mark out the major ones. And then all of these places where you have marked as um, support or resistance are an ideal places where price can reverse from. So to add to all of that, am I saying now that except price gets to those support or resistance, I cannot pick trade? No, I'm not saying that. I'm saying you can now begin to position for your trades around those areas. So what I mean now is any place you have marked at support, or any place you can see as a support on phone or on laptop, and the market is yet to get there, all you now need to set there is your pending order. See it? That's all you need to do. You just see them as seed level trades, like your planting season. So this is also a support. Then price has moved from there. Price is not yet there. All you need to put on this support is a pending order. And because price do buy from support more of the time, the pending order to put on top of the support is a buy limit. You just put a buy limit there. Then you put your stop loss below. Put your stop loss below. And then, like I said, your take profit has to be ×2 of it. If you don't know how to set these pending orders, don't worry. Instructions, video direction on how to do all of that will be uploaded later today. Now, for resistance at the top here, because that's where price has a high tendency to reverse from. If price is not yet there, that is a good place for me to go and set a sell limit. That is a very good place for me to go and set sell limit. I'll put a sell limit below that resistance, and then my stop loss will be above. My stop loss will be above, and my take profit will now be below. Take profit will be below. See it? So that is how I will be approaching anytime I am targeting reversal. And like you said, if the signal for the buy at support fails and price breaks the resistance, wait for the signal of the sell below the resistance, and then you'll be able to make your money. If the signal for resistance fails, wait for the signal for buy on top of the support, and then you'll be able to make your money. All right. So that's the basic knowledge of learning how to trade reversal. Reversal. Be consistent with the system, and then we'll have good reports at the end of period. Right. So I'm going to stop the recorded version now so that we can then take questions. We're going to take questions down. All the questions we have, we can take it after now. So once I'm done with the recording and I stop it, we're going to be locked out for a while, and then we'll come back and take our questions. Right?